Hey guys, what is going on? It's Shaquan here from SLFX Trading. And in today's video, it's a really great topic that I'm going to be covering. And the topic that we're going to be talking about is this price trend differently on different time frames. So we're going to be covering that today. Now, I'm just going to go ahead and jump into the video because I do want it to be short. I don't think that price trends differently on every time frame. I think it's your mind that tells you that. What I think it boils down to is your understanding of price cycles. Okay, so there are three cycles that price likes to move in. Okay, the first trend cycle is going to be trend continuation, and this is when price is continuing the trend that is naturally progressing in. So for example, if price is moving in a downtrend, then anytime price moves down, that's trend continuation. If price is moving in an uptrend, then anytime price moves up, then that is trend continuation. Then you have the pullback, which is aka the retracement or the correction, and that is when price is pulling back against the natural flow of price. So if price is in the natural progression of trend continuation going down, when price moves back up, that is the pullback or the retracement, but it doesn't stop the overall flow of price trending down if it was in a downtrend, and vice versa if it was in an uptrend. Then you have reversals, which is where price goes from a full downtrend to an uptrend or a full uptrend to a downtrend. Okay, so let's go ahead and let's take a look at this overall, right? So let's do an example. We're going to go back just a little bit here. I'm not going to tell you guys the pair nor the time frame, but if you can figure out the pair and if you can figure out the time frames that I'm using, then drop them down in the comment section below. Okay, so we're going to make this into like a little game here for today. All right, now let's look at this one particular pair right here, and I'm just going to mark out the highs and the lows. All right, and we'll mark out this because price did drop lower and then it did go higher. Okay, so we can see here that price is in a downtrend. Now, I am using on TradingView what's called price note tools. And what these price tools are doing is it's showing me the exchange rates of the highs, low, high, low, high. Notice how I don't care about every fluctuation. I'm really getting the fluctuations at every high peak and every low peak. The reason being is because these will tell the best story. So one side, which is my left side, this is a higher time frame, and the other side is a lower time frame. So it's a smaller depiction or more candles on what's going on over here. So as you guys notice, just watch my numbers, right? 0.75988. 0.74105, 0.75040, 0.72895. Every time price drop down, that is the trend continuation cycle of price dropping. And then every time price pulls back against price, it's a pullback. But notice how price at the high numbers, every time price pull back, it's not going past the last highest number. This is how you know that price is trending. Let's check out the high peaks here. 0.75988, 0.7504, 0.74262. Notice how price is decreasing at the top and then decreasing at the bottom. 0.74105, 0.72895, 0.71040. Notice how price is still declining on this time frame. So then when I drop to a lower time frame, I'm not going to tell you guys what this time frame is. It's still doing the exact same thing. The difference is the cycles. Now watch how the cycle is the same, but you just get bigger candles, which throws a lot of traders off. Okay, so same numbers here. Nothing has changed. Look at how price is still decreasing at every high and every low as well, right? And then you get down here, and this one can really throw people off, is when you get more fluctuations. But the question is, where is the fluctuation going? And this is where market structure is going to come into play, but we're not going to talk about market structure in this particular video. But what we are looking at is, if you guys see this green candle, I just want to show you something. This green candle, red candle, and then price ends up declining. As you can see here, this will be the green candle going up. This will be that next candle, which could be a hammer or a doji. And then you can see this next candle was that long drop here. It's a spinning top. Or you can say that it's a rejection hammer, okay? Or inverted hammer. And then price declines. And then what happens after the next few big candles, price is decreasing. That's the same candles on the other side. It's just broken down into smaller candles because now we're on a lower time frame. And then we get over here where price has made a green bullish engulfing candle, and then look what starts to happen. You know, price starts to move and it starts to pull back and you get a lot of fluctuations. and then price is pulling back, right? So remember, the natural flow of price is decreasing still because the exchange rates are declining. Because at this stage, if price is trending, you really don't want price in this area to go past the last highest number, or it stops trending to the downside, okay? And the cycle will change. But this is still just a mere pullback cycle. The only difference is you're just seeing more candlesticks and you're seeing more fluctuations. But here's my biggest question. Is price doing anything different on each time frame at this moment? No, it is not. Price is really going the same direction. I think what it is, you have to take a mental note that lower time frames helps create the bigger time frames of what we see. So if I'm seeing more candlesticks, right, each candlestick as a collective, depending on the time frame that you're looking at, each candlestick as a collective creates one big candle on a higher time frame, okay? So with that being the case, there's really not a difference. Like, you can't say that, you can't separate it and say, well, price is doing something different. That's not true. Price is pulling back on each time frame. It just looks different because how price is made up of that one big time frame, and it's made up of these smaller fluctuations, but the flow never changes. The flow of it doesn't change just because you drop down in time frames, okay? So if you keep that in mind, this is why understanding the trend first and then placing your structures that you trade, whether it's support and resistance, a trend line, key levels, even using an indicator, supply and demand, whatever it is you use, even looking at patterns. This is why understanding the higher time frame first, then plotting your structure. Your structure makes more sense because you get to see the full trend versus just seeing what's there at the moment. So let's dig a little bit deeper. Let's go to where price is now. The question is, how did we get there? So I want to focus on this full area here. The last area that price was at back in August was 0.71040. For us as traders, we would not want to sell this information because price is low. The reason why we don't want to sell it is because that's the discounted price that people who are actually buying the physical currencies in real life, that's the lowest that they could buy the price, this particular currency of Australian dollar. So what we could trade is the discount of price going back up, an assumption that if price is still trending, it could stay below 0.74262. And the question is, how does it get there? Now, let's talk about structure again. This is where most people plot structure and go to the left and say, well, sure, we can look at structure, we can say support and resistances here, or whatever the case may be. But if you read the naked price action candlestick chart, it's actually showing you what's going on. The red and green candles are more than just where you can plot structure. It's more like people. So if you think about it, if you know the main candles that repeat themselves the most, then you are able to identify your buyers and your sellers. So for example, these people were all of our sellers in the market. Notice how I'm not saying green for buy, red for sell, but I'm saying all of these people were sellers. The reason why all of them are sellers is because price still could not pass 0.74262. So it didn't matter who bought that day or whatever, the overall market is still declining. But when we get here, we have a very, very beautiful hammer and then a bullish, subjectively bullish engulfing candle. This should let you know that the momentum here can stop and then push back up to the upside. Now, does that mean that we're in an uptrend? No. What that means is we are in a pullback stage of the natural progression of price going back down to the downside. So with that being said, look at what happens over here on this lower time frame where you see more candlesticks. It's the same piece of information, right? So this area here will be that hammer, the red hammer, and this area will be the subjective bullish engulfing candles. And then what you get are fluctuations going back to the upside, back up towards 0.74262 with the assumption that we could stay below that price. But as you guys can see, price is up passing that price, which means now we are in the potential reversal stage. Now notice how this is the first time I have mentioned the word reversal. So far I've mentioned correction or retracement or pullback, which are the same words, which means the same thing, a pullback against the natural progression of price. And I mentioned trend continuation, uptrend or downtrend. Now I'm speaking on a reversal. A reversal basically means that we have a full trend switcher where price could go from a downtrend to an uptrend now, because now we passed the last highest discounted price that we could have sold for profit. So now with that being said, on the Australian dollar, if price can stay above 0.71040, then we could potentially go back to the upside. But the question is, how did we know we could get back down to this price? Well, let's think about what we're actually trading. What we trade here in the forex market are exchange rates, right? And what we also are trading is supply and demand. So basically, because we have a higher price, let's be honest, would you want to buy something that's marked at a high price, or would you want to buy it at a discounted price? We want it at a discounted price. So to buy here would be to buy too high. So what we could do is, as traders, get evidence that price would drop back down to the downside or pull back to the downside and pull back to a targeted area so we can buy. And then you as a trader can trade to that discounted price. So let's say you wanted to stay above 0.71040, which means you need a piece of structure above that exchange rate. Whatever you use, that's your choice, okay? But look how price gets there. And now look at these exchange rates. Do you see how price is trending to the downside? Your exchange rates at the top are dropping. Your exchange rates at the bottom are decreasing, declining as well. And if you mirror the two, you can see that they're the same movements. The smaller candlesticks are creating the bigger candlesticks, okay? The smaller time frame is a complete replica of the bigger time frame and vice versa. So there is no way that price could be doing anything different on every time frame. It's the cycle. And where do you get the best picture of the cycle? A higher time frame. So one high time frame, one low time frame that's not too low to where you're messed up with the candlesticks that you cannot see, okay? So I pray that this video has helped you guys if you're one of those people who thinks that price is doing something different on different time frames when it's actually not. It's just that if you are too off in your time frames, if you have like a high time frame like the monthly and then you're going all the way down to the 1 hour, oh, you're going to be very messed up because that's a really big range that you're trying to compare two time frames on, okay? So if that has been you, or if that ever has been you, and now you're watching this video and you see value, give it a thumbs up and like the video. Go and share it with other traders who may need this same help and say, yo, she just broke this down very well for us. Let's study what she's saying and let's just go out and see this on other currency pairs as well and how we can use it to our advantage. So also make sure you guys are subscribed, and I will see you guys in the next video. You guys go have a safe trading week and be blessed.